mortgage firm. Oh, thank you. I got to record it. Everyone wants to record it now. So we are recording this meeting, and I am a branch manager with a mortgage firm. Thank you for joining us today for our discussion on how solar panels affect financing, appraisal values, title, and insurance, homeowners insurance. Today we have an expert panel that includes each of these industries that I just mentioned. So I'd like to give a quick introduction to our panel that's going to be presenting, and they each have their own set of slides that they're going to be presenting. And first, and I'll go in the order in which they're going to present. First is Laura Meyers. She's one of our certified mortgage advisors in our branch. She started as a loan officer in 1995, and she has been with the mortgage firm for over 12 years and has been a recipient of the Circle of Champions Award for the last 10 years. So Laura's going to present on the lending side, on how solar panels affect lending. And then our next up after that is David and Connor Holmes. They are certified residential appraisers in the Central Florida area, and they specialize in various property types, including large acreage, high value, multifamily, and are familiar with photoelectric solar panels. David has 20 years of experience, and Connor has 9 years of experience. So, and then Noemi is representing First International Title. Michael.Ussery and Brenda.Yashinsky are also sponsoring here with us today. And Noemi is going to be their presenter. She's been in the title industry for over 16 years with Alliant National for 9 of those years, and recently transitioned into underwriting and serves as a Florida underwriter. She lives and worked in Central Florida for over 36 years. So that's our title expert. And then Greg Hemming is our insurance expert, and he's one of the owners of Express Insurance here in Longwood, Florida. Greg Agency specializes in home and auto insurance and has been serving Central Floridians since 2004. Greg serves on various presidential councils for Florida insurance companies. He is an avid baseball fan and enjoys working one-to-one with realtors and clients to find the best possible solution. So I think you're going to get a whole bunch of information. We're going to try to keep this to an hour. So want to make sure that we give everybody their time. So I want to go ahead and get this the show started. So first we're going to have, give me 1 second. If you guys have ever moderated a meeting, so can be a little, there we go. All right, give me 1 second. Let me share my screen real quick. Hold on. Gotta get in here. All right, share screen. Give me 1 moment. All right. All right, can you guys see the screen now? Perfect. All right, let me get this started here. Resume slideshow. Okay, can you see it? Is it like in the form it's supposed to be in? Or is it in this?
I can see the slides on the side still.
Okay. Have that transition slideshow. Slideshow, resume. I think I shared, hold on. Share. Okay, now can you see it right?
Yes.
Okay, cool. All right, Laura, you take it away.
All right. So I'm going to be the first to speak on the panel. See what I did there, panel. And we're going to discuss the types of solar panels and how they affect financing. And then the appraisers will speak about how it impacts the appraised value. So if you're listing a property or showing a property that has solar panels, these are definitely questions you need to ask. Are the solar panels leased or owned? Is there an existing loan for the solar panels? Is the loan to be paid off at closing, or is it to be transferred to the new buyer? And then are they owned or are they leased? Because that has a huge impact too. So these are all very important questions to ask. I would also ask for copies of their agreement, because sometimes, believe it or not, the owner of the property, they don't know. So getting a copy of that documentation, so we know how to proceed and you know how to proceed, is definitely key. because if they are to be transferred, we got to make sure the new buyer is willing and able, to qualify for that transfer of the solar panel loan. So what you may not know is there are actually 5 types of solar panels. So the first is a solar power purchase agreement. It could be a solar panel lease. The panels could be financed as personal property, so just a personal loan, or the solar panels can be financed as a fixture to real estate. It's like a second mortgage or a lien against the property, or the solar panels could just be owned free and clear. So those are 5 different ways. So the first one, and a lot of people don't realize this, is the solar power purchase agreement. So in a situation like this, the owner of the property, they do not own those solar panels. They're only buying the power that those solar panels generate. So when title does a search, obviously there's nothing that's going to come up as far as a lien against that property because they don't own them. And because they don't own them, the value of those solar panels wouldn't be included then in the appraised value of the property. So again, we need to know more with those solar panels being on there. How does that impact the new buyer? Are they responsible for paying for that power? So again, it's always important to get whatever documentation the owner of that property has on those panels. So that's the first type of solar power. The other could be a lease. And personally, this is the one I see the most. In a situation like this, then the owner of the property doesn't own the solar panels and they're actually paying a monthly payment on those panels. It's typically 20 to 25 years and they don't own the panels at all. So obviously they're benefiting from having the panels, but they're not owned. So when the title company does do their lien search, there wouldn't be a lien on the property from those panels. And again, because they're not owned, there's not going to be any value given to those panels on the appraisal. But what's really important when it comes to the lease is getting a copy of that agreement, because if that lease has to transfer to the new owner of the property, the buyer, we need to see what those payments are. For one, does that buyer qualify? And 2, do they feel comfortable proceeding, not only purchasing the home and making the payment on the mortgage, but also having this additional payment for the solar panels? Another type is they buy the panels and they just get a personal loan for the panels. So it's considered personal property then because it's not a secured lien against the property. So the borrower owns the panels and they're purchasing them, and there's some type of note or security instrument that may be in play there. Again, that's why it's always important to look at the paperwork. When title does their search, since the solar panels were not financed against the property, lien against the property, then no lien would show up on the property for that. And in terms of if it were a refinance, then technically, since those are shown as personal property and it's not, and they don't own those panels, if it was a refinance, we wouldn't be giving value to those solar panels, and the appraiser will get into that more. But if they're owned free and clear, so if that personal loan is being paid off when the new owner is buying the property, then yes, they could give value to those. But if that lien is being transferred to the new buyer, again, we have to figure in, what that payment would be into their debt to income ratio. And then fourth, the solar panels could be financed as fixed real estate. So that's an actual lien against the property. So they own the panels. There is a note or security agreement out there for those panels. So when title does a search, then that's going to come up in their lien search. In this situation, the previous one, if there is a loan on those solar panels, it's definitely something that you, as the listing agent, want to know, because obviously that's going to impact what your seller nets from the sale of their home. So it's important, and again, to know whether or not that has to be paid off or if that loan gets transferred to the new owner. So again, if it's a refinance situation or if that loan's being transferred, the solar panels may not be included in the appraised value, because technically, if the payment weren't made on those solar panels, they could be repossessed. But the appraiser will go into more depth with that as well. So, and then obviously if they're owned free and clear, that's pretty self-explanatory. the owner of the property owns those panels. There is no debt related to them. So when they do the lien search, if anything does come up, then it should show released because there's no loan against those panels anymore, against the property. And the appraiser would obviously recognize the solar panels and consider the value of those. And we don't have to worry about any type of payment on them. But what's key for us, and I just want to bring this to your attention from a lender's point of view perspective, is we all know how tough this market is right now. And we are qualifying our clients for the maximum that they can afford a lot of times just because of the market and with prices going up, interest rates going up. So if they're already at the top tier of what they qualify for, and then you're showing them a home where there are solar panels and there's a payment for those solar panels, whether it's a lease or a loan, that could have a huge impact on them qualifying for the mortgage. So we may have gotten them qualified, and sometimes just an extra payment. In this example, we used an extra payment of $150 a month can make all the difference in whether they would qualify for that mortgage or not, or if they even feel comfortable carrying the load of that payment, and if they qualify, because we don't know what we'll have to find out what the qualifications are with the solar panel lender or leasing company too, to make sure that is something that the new buyer would qualify for as well. So again, just keep that in mind. Sometimes when we look at the agreements too, they'll say, oh, we're only paying $125 a month. And you look at the payment structure, and it could be a tiered payment structure where they pay more over time. So again, it's just so important to make sure you get a copy of the paperwork associated with those panels.
All right, well, cool. So that's the end of Laura's presentation. Do we have any questions that we want to address just for the lending portion? The next portion is the appraiser, which I know you guys will have a ton of questions for that. But if you guys, I don't see any in here. Real quick, I'm just going to take a moment between to look at the chat. There was a question in here about tax benefits, but we are not, this is really how it affects real estate and how when we're selling real estate and how it affects all the components, not any of the the tax benefits. That's a completely different, I'm sure it would be super interesting, but this is more of how it affects our business. So, all right, we're going to move on next to the appraiser section on here and hand it off to David and Connor Holmes. Sorry about that, guys.
No, you're good. You're good. Hey, real quick, I know that it's probably difficult because I know when we go in and interview homeowners and or agents, when we go into a property, more so homeowners, they try to tell us how much they have spent on everything. And solar panels are very, very expensive. But it's important for the realtors when you go in, somebody will tell us they spent $60,000 on a set of solar panels. And cost very rarely in our world equals value. So when you're pricing properties and they tell you they spent that $30,000 to $60,000, it's important not just to add that on to whatever you're looking at for your CMA. I know we try to compare like properties, and the big thing to note from this is if they're not owned, we do not consider solar panels at all in our appraisals. And in the appraisal process, there's no line item for that energy efficient item. So you'll typically see it in improvements or upgrades to the house, and you'll see it in the summary where we wrote about it. But we're comparing like properties out there. So solar panels vary in value depending on the location that you're in.
I think it's very important to know your market area, like places like Lake Nona or Story Park. Solar panels are a very marketable trait. However, a lot of the places I cover, like Northwest Florida, it could be an over improvement. It might not contribute anything at all.
Yeah, to me, we're looking at paired data analysis to see what value they bring back when they're owned. Again, when they're leased, they mean absolutely nothing to us. But it's a different measure in each market, depending on how the market is reacting to the solar panels. I mean, do people want them? You'll see that by people buying those houses with them and willing to pay more money for them. That's pretty much it when it comes on the appraisal side, when we're looking at anything when it comes to value, whether it's a pool or what have you. In our appraisal, we have to bracket all the amenities that the subject property has, and then we do our regression analysis to figure out what the market is willing to pay for any one particular item. I mean, that's pretty much it right now when it comes to it.
Sometimes there's not also like an incremental value, like everybody seems to think there is, like, how much does a window add? How much does this add? I mean, that's just adjustments in general. If that was the case, appraisals would take us probably 2 years to do one assignment. And then no loans would happen. So.
And then like, compare it to like a pool, like it's just like an extra, like compare it using that. Because it's something extra.
Here's perfect. I just put a pool in and the cost was in excess of $80,000 for the pool I put in. And right now pools, just like solar panels, are crazy. Everybody wants one because everybody's staying at home. But the market value in my particular area would never accept an 80,000 plus pool as an adjustment. That's just not how it works. When you do your regression, it is something considerably less. And I know because I've been in the real estate world, a lot of realtors, when I know, well, the garage is anywhere between 10 and 20,000. We don't know that in any particular market. There's no fixed number for any of these items. That's why we do a regression analysis at the time of the inspection.
For that market area.
For that market area, that particular market area.
Because if you have two same exact homes right beside each other, one puts $100,000 pool in or not $80,000 pool, it's not like somebody's going to pay 80 grand more for that house.
Exactly,
right?
exactly.
And the same thing with solar panels, right?
Exactly.
But until the market starts proving it.
Right, and that may take some time.
Right. And fortunately, we are seeing more of these solar panels, right?
Oh, everywhere. I mean, before, like 2 years ago, it was almost impossible to find comps that had solar panels. But now, I mean, we'll go do the research. But a lot of that comes back to, and is very helpful for all the agents who are here and spread it. The more information you put in your listing, that's where we draw our information from. And that's where we figure out when we're doing our regression, this one has this one doesn't. This one has this. So you'll see that number based on the information that we can pull. So more information in your listing is great. I can't tell you how many times lately, and I don't know how it's still happening, but some agents will put, this house has a pool. And when we dig in a little bit, it's an above ground pool. Well, we don't give any value for an above ground pool. That's personal property. So if it's a pool, it's got to be a real pool. So we are digging because desktop underwriters are looking at what we're doing as well and kicking back to us. Well, you said this one has this, but your peers said no.
I guess also to reiterate as well, when he's saying regression analysis, that is a way we use in the local MLSs that we have to directly extract data in Microsoft Excel to come up with our adjustments. So if anything is input incorrectly, it could affect the outcome of how our adjustments are derived.
Does that make sense?
Mm-hmm.
So all the more reason to make sure you're putting all the amenities, all the upgrades, any information that could affect value, put that in the MLS description and in the listing.
Yep.
Exactly.
Yep. Even on refi, we do the same thing for our clients. We tell them, have a list of all the things that you've done to the house. Give that, even on a refi, we do the exact same thing.
And I'll say one more thing. I think a lot of homeowners are confused because when we ask the questions, do you own the solar panels or are they leased? All of them will say the same thing at first. Well, we're making payments on them. We're making payments on them. We don't own them outright, but we're making payments on them. Well, there's a difference between making the payments, like you're saying, to get that loan to own them versus leasing them. So we try to clarify that when we're out there doing the interview. We had just as long as it's like a mortgage payment that you'll own them at the end versus a lease.
Right. And so there's one question in here. How does it work if they're going to pay off solars at closing with proceeds during the appraisal process?
But we're going to look at those as owned. So we're gonna try to find like properties to compare them to. Our big key word that we listen for, we lease them. And if they lease them,
There's
then
no value.
there's no value given whatsoever.
Okay, let me see if there's any other questions in here. There was another question in here, and I'm not quite sure, but the person won't have an electric bill. Well, they may, but it may not. So would that offset the debt to income ratio? Can we use any of that coming in? Laura, do you know?
I think it depends. We'd have to get more details on that to run by an underwriter to see how that would work and how it impacts their electric bill. But the thing is, if it's a lease payment, they're going to consistently have that payment. To be able to judge, how that's going to work with what they're saving on their electric bill. I mean, I guess if they have the data, true data that we can show to the
It would be
underwriter
like
and the history of
Any
that.
other income, it has to be regular and reoccurring.
Yeah.
We would have to prove that that income has been there, just like that we need 2 years of employment to show income. We'd have to show a 2-year history. And is it consistent? Is it regular and reoccurring in order for us? I would imagine that's just,
Right. Yeah.
that's just the answer to anything with when it
I can
comes
tell
to
you,
income.
I haven't had one yet where we've been able to use what they would save on their, electric bill or their power bill to offset the payment.
And
So
if it's leased, then, I mean, they can, if they stop making payments, then they can be repossessed. So I think underwriting is always going to go with the worst case scenario. What could happen?
Right.
If the worst thing that could happen, and that would be that they would be repossessed, then we wouldn't be able to count income. So it just depends. On a lease, you can purchase a system after a specific time frame. Possible.
it depends on their agreement, but most of them, the leases that I've seen typically are 25 years. And I think they do that too, to keep the payment down. But again, it's all a matter of what's in that agreement, kind of like when you buy a car, same.
And with any of the end users, VA, FHA, Fannie Mae, once we know it's leased, we do not consider it in value.
Right.
And so maybe this answers the question, but there's a comment here, but now solar panels are now being transferred to the new buyer. How will that work?
It's a great question. I mean, we won't know that during our interview process. So if it's a lease, we will not look at them as value to the property.
Right. And we would just look at it as debt.
Right.
Really. I mean, it's just debt. And if the new buyer is willing to take it on, right?
Exactly.
All right, cool. All right, so we're gonna go on the next. I want to keep us on task here, so we make sure we hear from everybody here. So keep on putting your questions in, because we will get to them, even if you have one later. We are going to go to our next presenter is going to be Noemi with Alliant Title / First International Title. She works with them. And let me get her solar. Okay. Are you, Noemi, are you ready to go? And can you see your slides? You might have to unmute yourself, or I might have to do it for you. Okay. I just sent you an ask to unmute.
Yep, I got it.
Okay, cool.
All right, and am I in control of the slides right now?
I don't think so.
Okay. I can let you know when to switch slides.
Yeah.
All right, so good morning. So for this portion of the presentation, we're going to be focusing on how solar systems affect the title to the real property. So we're going to go over bits and pieces of the lease, what a UCC1 is, how solar systems can affect the title, how you can protect your buyer, and then some tips for representing sellers. Next slide. So solar systems have increased recently in popularity, and for a few reasons. One is the cost of manufacturing solar panels has gone down, and the second is that there's just a greater awareness about reducing our carbon footprint. So many homes will have solar panels today, so it's important to know how these solar systems can affect the title. Next slide. So solar panel systems are usually leased for a homeowner for a period of 20 or up to 25 years. The lease is not recorded in the public records, but if it is financing, there's going to be a UCC1 that's recorded, and that's how title gets affected. So let's talk about a UCC1. The UCC stands for the Uniform Commercial Code. It's a set of model laws that govern business transactions. And what states do is that they take that model law and they amend it and then adopt it into their statutes. UCC ones are governed in Florida under Chapter 679 under the Secure Transaction section. Next slide. So to the right, you're going to see a template, and I'm going to go over just the main components of a UCC one. On the top right-hand corner, you're going to see the recording stamp. That's for recording the UCC. And then you're going to see the creditor's name. That's the lender's and contact information. Then underneath that, you'll see the debtor's name. That's the homeowner's name and their contact information. And then you'll see the collateral listed, which is the solar panel. And sometimes they'll include the property legal description, but not all the time. So sometimes the homeowners will sign a lease for the solar system, but if there's financing, there's going to be a UCC one that's recorded by the vendor. And essentially what the UCC one states is it declares that the vendor's lease is secured by a lien on the fixture, which in this case is a solar system. By the way, UCC ones can be used for any kind of fixture like water softening systems, etc. But today we're talking about this kind of fixture, which is solar systems. The UCC one also states that the vendor can take back the solar system if the homeowner defaults on the payments for the lease. So the result is that the UCC one secures or collateralizes the lease against the solar system. Next slide. So what does it mean to secure or collateralize the lease? So let's use an analogy. When you take out a loan to buy a home, you sign two contracts, the promise to pay and the mortgage. Mortgage says that you're going to give up the home as collateral in case you fail to pay under the promissory note. So basically your home loan is secured or collateralized by the home. So just like a mortgage uses a home to secure payment, a UCC one uses the solar system to secure payment under the lease. Next slide. Most UCC ones are effective 5 years after they are recorded. They can be continued. So title agents know this. They will look for continuation statements. Those statements are usually filed or must be filed 6 months prior to the expiration of the 5 years. And then the way you terminate a UCC one is you terminate it through a UCC 3 termination statement at the time of the sale. If the UCC one is not terminated, the UCC one will take priority over the buyer's mortgage and over the interest that the buyer takes under their deed. And eventually, if the homeowner doesn't make good on the payments and they default completely, that solar system can be repossessed. So how do you protect your buyer? So prior to the showing, ask the seller whether or not the solar panels are leased or owned. Everybody's said this so far multiple times. If the solar system is leased, you want to ask the seller for a copy of the lease. Does the lease require payment upon the sale of the home? It's a very important provision. And also, does this lease say that the lease is assumable by the buyer? If the lease is assumable, you want to make sure that the buyer qualifies for that assumption. And here's a little side tip. Buyers can't be forced to assume the lease. If your FAR contract or your purchase agreement says that the seller has to deliver marketable title, they are going to be forced to pay that off. You can't force the buyer to assume the lease unless you do it contractually, of course. You also want to ask about assumption fees up front. Next slide. And you want to ask the seller to disclose in writing how much remains to be paid. If there are payments and fees owed on the solar system, your client's offer should, of course, take this into consideration. Also ask about warranties. My husband and I recently made a big purchase, and the warranty paperwork was tedious, and then we had a deadline to do it under. You want to make sure you get all that information up front so that your buyer can transfer the warranty over successfully post-closing. And here's a little side tip for commercial clients. There is no right to sunlight in the Sunshine State, which is kind of ironic. So if you have commercial property, you want to make sure that the property also benefits from a solar easement, because if another high rise comes up and blocks the sun, that solar system is not going to remain operational. So you want to watch out for that as well. Next slide. Okay, here's some tips for representing sellers. You want to obtain a copy of the lease and disclose the solar system on the MLS. That's Basics 101. But again, you want to review the lease to determine whether it's assignable or whether it needs to be paid off at the time of the sale. Here's a little side tip. if you have a client that's, you work with frequently and they are mentioning that they're going to get a solar system, maybe for commercial property, they can negotiate with the vendor to remove these pre-qualifications requirements for the buyer, these assumption fees. So especially if it's commercial property, you may have a little bit more leverage than say on a residential property. So that's something to keep in mind. You also want to know the balance owed and factor that into the listing price. If the buyer sees that there is a solar panel system on the property, they may want to negotiate to reduce the listing price, but you'll have that information handy, and you can confidently say, hey, we've already factored this into the listing price. We know the balance owed and we reduced the listing price by that much. If the system is paid off, you want to gather proof for your title agent upfront. This is going to help prevent delays at the closing table. Next slide. And last but not least, if the lease is assignable, you want to let the title insurance company know before the closing. The assignment will need to, or the assumption will need to be signed by the buyer and seller at closing. The vendor will need to sign a subordination for the new mortgage. The buyer's lender will need to approve the subordination, and the old UCC1 will need to be terminated. And then what happens is a new UCC1 is recorded after the buyer's mortgage is recorded. So how do our title agents search for UCC1s? They do that by looking at the official records of the county. You can do that as well. Just Google search Charlotte County Property Appraisal, Official Records Office, or you can also look them up under the Florida Secure Transaction Registry, and the website is right here. Next slide. All right, so knowledge is power. If you see solar panels on the property, just be informed and investigate ahead of time, because that's going to save a lot of time and money for your client.
Awesome. Thank you so much, Naomi.
Thank you.
All right, let's see if we got some questions for you. We'll take a quick break before we go on to Greg Hemming and insurance and how it affects insurance. Is there a distinction between leased and financed?
Yeah, there is a distinction. You can either lease it outright, or you can, it depends on the paperwork. Somebody mentioned that earlier. I believe you can actually probably have both. You can have a lease where you're financing like a kind of like a rent to own. I'm not exactly sure. The mortgage person, the one who talked about the financing, would probably have better information on that, but it could be a combination.
Mm-hmm. Yes.
So
Well, if they're
again,
financing,
the key is just look at the paperwork,
Right.
because every situation can be different depending on the company. So just looking at the paperwork for that lease to see if it is assumable. Again, what Naomi was saying, is it assumable? Are there fees involved for the assumption? Does it have to be paid off when it changes title? So those are all just important things to look out for and to review in that paperwork.
And that also might be important for agents to put in their listings, whether it's a leased solar panel or an owned solar panel.
Mm-hmm. Absolutely.
Does having solar panels reassess or assess value and increase taxes? Does it reassess the assessed value and increase taxes? I think it all depends on whatever the value is, the house is, the client is willing to pay for it. I mean,
No, I think you're talking about the county assessment.
yeah, they are, but I mean,
That's a different beast. The county may come out, most of the time when big permits are pulled, the county will come out and see what's being done so they can figure out if they can get more money.
I mean, you have a whole area of solar panel homes and so on, and all the prices are higher. Well, then, yeah, your assessed values are going to be a little bit higher. But again, it's similar to, that's why I think it was a good, Laura mentioned, like, think about it like a pool, other than the fact that the problem is we do have a little lingering. We would never expect anybody to take over a pool loan after closing, but these are a little because of the benefit afterwards. But it's a little, if you think about it like that, then it can kind of, it makes a little bit more sense. You should see, okay, what is the value allotted to solar? There was another question here. What is the value allotted for solar panels on average? But
there is no average.
Mm-hmm. Yeah, I think it just depends.
Yeah, I mean, as vague as it is, it just depends on your market area.
Well, and you see some streets too, where everybody on the street has solar panels, or it's all throughout the neighborhood versus a one-off, two-off. So obviously that would make a difference too.
If we do need a subordination for them to assume, it can take up to 3 weeks. So please keep that in mind for closing date. Actually, that was my question, Michael. So thanks for addressing it. My question was, what is the time to assume? Because yeah, a lot of times people think that this is like an overnight, like a stamp, and then it usually, and then that holds up closing as well, right? It's something that can definitely hold up.
That is, I know just from my perspective as a lender, the first thing we ask for, if we know if it has solar panels, I call the listing agent and I ask for a copy of that agreement right away so we can get working on it. And I make sure title has it too.
Mhm. All righty, I think that's it. All right, so we want to move on to Greg Hemme and give him his time. So give me a minute to get his presentation up. All right, see. All right, Greg. Nice, make sure you're unmuted here.
Greg, is that your house?
I certainly wish. I'd like that. Talk to the realtor that sold it, actually. Actually, it truly is an insurance agent's home. It was sold and he shared the photo with me, and so then I copied it over to here. But that was his little boat that came as part of the sale. So for mine, I wanted to talk about a home insurance perspective, because at the end of all this, we have to secure this with home insurance. We get the mortgage, we get the title, we get everything cleared. The appraisal comes in great, but we need to secure the insurance, and we need to understand how solar panels are protected or possibly not protected. So could you go on to the second slide?
Oh, yep.
So here's a quick question, true or false? Homeowners insurance will cover my solar panels after installation. And the correct answer is maybe, maybe not, yes, no. So let's get into some of the details. For those of you familiar, you might recognize that quadratic equation up there on the top left. You might have had that in high school or college algebra. If everything was as easy when it came to solar panels as plugging in the quadratic formula, we'd all be able to solve it. However, it's not quite that easy. Some companies accept solar PV cells, and I want to talk about how they'll insure them. What I mean is that each company has its own perspective on photovoltaic systems and how they'll cover them. Most companies will accept PV or solar cells. However, there's always a part B to that sentence. And oftentimes in insurance, I see a part C answering a relatively simple question from a client. Does my company cover solar energy panels? Well, what do you mean by that? Do you mean hurricane? Will they cover them for hurricane? Do you mean, will they cover them for non-hurricane events? Will they cover them for hail? I will tell you the one commonplace is they'll all cover them for fire if the insurance company accepts solar panels. What also widely seems to be unknown is whether, can you just go back one quick thing?
Sorry.
Yeah, is whether they will cover it for the wind, hail, or hurricane exposures. And this is what I'm going to break down, and I'm going to cite some specific examples on my next slide. So how widespread is the difference between companies, and why isn't there a yes or no for clients? Because the reason is each company has a different appetite, just like each one of your buyers has a different appetite. Some want pools, some don't want pools. Some are interested in solar, some may not be interested in solar. Some are just used to paying the power bill. And I broke down some particular examples, like Frontline. They will accept solar panels as long as they're not net metered. Now, most of you that have been involved in a solar transaction knows that almost all solar people want to be net metered, meaning they can sell the energy back. So the inner workings of that, the net metered, basically just means they can sell it back to the power company. Of course, that's a whole nother topic, whether the power company wants to pay retail or wholesale rates. And that's been an ongoing thing. And I know there's been some recent legislation passed in terms of net metering. Another example, Florida Family, widely revered as one of the top insurance companies in Florida. I'll tell you, if you have your home with them, by the way, you're doing great. Florida Family will accept 20 solar panels on homes. They have to be over 2,000 square feet, and it also can't consume more than 50% of the roof area. So, and if the home was under 2,000 square feet, you sold at 1,976 square feet, they only limit it to 10 panels. And that is simply an acceptability guideline. This is what they're willing to do. At the end of the presentation, I'm going to bring you back around as to why some of these strategic decisions were made. But they weren't done with just randomness. They actually had some forethought in it. Recently, we received a memo that said Florida Peninsula will now accept solar systems up to tier 1. Then people say, what is a tier 1? And that can be confusing, because if you start searching tier 1, there's tier 1 solar panels, but there's also a tier 1 solar system. And when I refer to solar systems, I'm talking about PV system, not the Milky Way galaxy or anything astrological. What that means is up to 10 kilowatts. So solar or PV systems are defined into 3 classifications: up to 10 kilowatts, 10 kilowatts to 100 kilowatts, and then over 100 kilowatts, which would be like the Tesla factory in Austin. That's often a magic number, that 10 kilowatt for many of these. And when I talk to insurance companies, they have that as their magic number in mind, what they're willing to accept in terms of risk classifications. Now, one of the newest ones and one of the most accepting companies is American Traditions. They accept solar panels and allow you to buy back coverage for hurricane protection. The key there is buying back the coverage for hurricane protection. Typical Central Florida home, I just insured one, was $450 for a $20,000 solar system. So you're talking $225 per 10,000. Now I know many solar systems go up to $50,000, and it's really about how much are you wanting to buy and insure to confirm that's protected for hurricanes. Another one that people often refer to, and a lot of my clients use them for solar, is AAA, the Auto Club, the Motor Club. They accept solar, but they have given me insight that they're considering removing that coverage and why they're not going to take that in the future. But it's still on the fence, so it hasn't been decided. I'd like to address this last piece. Many companies cover solar. However, they specifically exclude wind, hail, or hurricane damage to the system. So it's really important to understand that. On the next slide, I'm going to talk a little bit more about that, but I will recap it. I went into a client's policy on American Traditions, and the best way to check for the coverage, if you have a solar energy system installed on your own personal home or your clients, is to call your insurance agent and ask them. Now, a lot of people don't want to go through an 80-page policy document. And this example that I cited here was buried on page 59 in the document. But if you'll look down on the second paragraph there, you'll say your policy includes an endorsement which excludes coverage for any solar panels, solar roofs, or solar water heating systems. However, again, Part B and Part C, that's how insurance reads, you do have the option to select coverage for these items as an optional coverage. So once they put this endorsement on there, if you don't buy back the coverage or you have a policy with them now, you're not covered for hurricane. They never intended to cover it for hurricane, but they actually are making it available to their clients to buy that coverage back. And again, it gives some specific language there, but we can all read that, and we'll get copies of the slides at the end. If you really want to add coverage for your solar panels, contact your agent and request that coverage. They can give you an advice. That's why you're paying them. We get 8 or 10% commission from most insurance companies, and that's what we're here. We're here to help you. Question is, I get this. Why in the heck would an insurance company not want to insure a home with solar energy system? I hear that from the clients a lot. Like, are the insurance people anti-clean energy? No, actually, they're not. Insurance companies and many of their buildings actually have solar on them. So they are actually pro-solar, but the real reason is claims costs. They're the driver behind the issues in insurance and why companies don't want to adopt solar PV arrays. It's not, as I wrote here, it's often not as simple as taking them off and putting them back on when the roof needs replacement. That's what people think. You know, we oversimplify something. You take the solar panels off, you put my new roof on, you put the solar panels back on after the roof's on there. So let me talk to you about the costs associated with replacing a solar roof and why it's not widely adapted. So let's talk about a roof that was damaged because of hail. They have the cost to replace the roof. So we all know roof costs are through the roof right now. But literally, so they have, let's say it's $15,000 to replace the roof. Now, solar companies will often say, oh, it's only going to cost you $1,500 to take these panels off. The real world cost that I see on insurance companies and on claims, it's about $7,000 to remove the solar panels and put them back on. Then there's also miscellaneous fees. Contract provisions in your homeowner's insurance will say that the insurance company has to store them. Some people don't have a third car garage to store 50 solar panels. That's why they took up your entire roof. So the insurance company has to get weighed down with the cost to store your panels while the roof gets on. Then they have to transport them back there, get them reinstalled. But I'm going to tell you the one reason really at the crux of it, when companies stopped wanting to take solar. It's the one that broke the back on claims, and that is After all this was said and done, after they got the roof, after they got the solar on, after the insurance company paid for the storage fees and transported them back to the house to get them reinstalled, agents and or insureds were suing the insurance companies for the loss of power for those 3 months when they didn't have the solar panels. So you had $7,000. Remember, I already told you $7,000 to take those panels off and on, $500 to $1,000 to store them, and now $1,000 or $1,500 for that lost energy bill. They're entitled to that. They are entitled to that. Your loss of use provision does provide you that. However, that's when insurance companies said, wait a minute, we have a $15,000 roof that's costing us $25,000 to put our customer back to whole. Let's push the brakes on this for a minute and dive back down. And let's see if we need to charge more. So we can go to the next slide and I'll talk about that just a little bit. But the one thing I wanted you to do is, as realtors, do not be intimidated by solar homes. Get to know and embrace the proliferation of solar energy. It's here to stay. It's going to continue moving forward. We just have to understand the hurdles and obstacles. And I appreciate Christine and Laura and their teams for putting this together, putting us all together so we can overcome the obstacles for your buyers and sellers may face. Insurance is available, but coverage limitations may vary from company to company. So getting to know your insurance agent, getting to know how your policy works is really important. Don't assume that all insurance companies will take a home with solar. We have a few companies, I'm going to cite an example, Southern Oak will not take it with one panel on there. Even if you have that little solar water heater panel, some of you see that single panel on it, they will not take it. Their promise is that the holes created in the roof can then later lead to leaks. They see increased claims examples, and rather than delve into this, they may retrench in a few years. But right now, because insurance companies are kind of touchy, that's the nicest way to say it, because of all the roofing, they're just not going to take any of it. Get to know a local insurance agent too and chat with them a couple times a year to stay informed on changes. You probably refer your business to somebody. Talk to them, every 3 or 4 months. Ask them what's changing in the industry. A lot of times we go about and we're so busy with our life, but agents enjoy sharing this knowledge with realtors because then realtors are so much more valuable than these FSBO owners who know it all out there. You add value to this whole equation. And by learning a little bit or getting coached up, you'll be more advantageous for your buyers and sellers. If you need our firm to help or advising your clients, do not hesitate to call me. I don't have to be your preferred agent, but I'm certainly always here to help. And anybody that's worked with me will attest to that I'm always here day and night. People get my cell phone. But solar knowledge will have a value in your future sales. And I impress you. Thank you so much, everyone, for being here. And I'll turn it back to Christine now.
Awesome. Well, thank you so much, Greg. And Greg he's just so knowledgeable about this stuff. So it's just a really, let me stop sharing here and then let me get some multiple advantage. Sure. I'll just stop sharing. How's that? Okay. So I can hear, I don't know who has some people in the background. I tried to mute everybody, but there does seem to be some chatter in the back. All right, so let me go to my chat real quick. Let me answer some questions we probably have. But if you can mute yourself, maybe. I think that was you, Greg. That was you. All right, let me go. Do the vendors of lease systems typically insure the equipment themselves, or do they pass any repair costs on to the consumer? I think that message is for Greg.
Again, it should be covered as part of your homeowner's insurance, but they may be talking in specific to the leased contract. Some of the lease contracts actually provide insurance coverage. So if any of the panels are damaged, a lot of times those lease contracts will indemnify them and pay them for that loss.
Awesome. And the presentation is recorded and you guys will all get, if you RSVP'd, we have your email and we will send out the slides and the presentation to you guys. So I've seen a couple of asks for that. What else? Okay. Just seeing if there's any other questions. You guys see any? Are you guys in the chat that I'm missing? It's kind of hard when they're on top of each other. But awesome information. I don't know about you guys, but I had no idea how it affected insurance. and how, and I bet there's a ton of people out there that either are uninsured for their solar panels and have no idea about it. So, and just like anything else, you know, I just think it's important to ask the questions and get to know exactly what you are covered for and things of that nature. So I think those are all the questions. Did you guys see any other ones? Did you guys have any other questions for the appraiser? For anything else like that? I think we all know the number one answer is it depends. And then figure it out from there, right? I don't know. Feels like I answer every question like that these days. Well, it depends. So, because everybody's situation is so different and there are so many different facets out there. So any of the presenters like to add a last comment before we end the meeting? Maybe get a couple more questions in, because I know you guys have questions about this stuff. The question that just came up, if the panels are not owned, do they need to be insured, Greg?
There it is. So they don't have to be insured, but again, it's a matter of whether you want to protect them from hurricane. You should read your lease agreement, because again, the lease agreement will provide those provisions in which they will indemnify them. Do they cover them from hail or hurricane? If they don't cover them from hail or hurricane, you want to make sure that they're protected in case they get ripped off the roof. I mean, if we have a category 5, they can rip solar panels off. I've seen it in Louisiana pictures.
Mm-hmm. All right, well, I think we learned, do they own them or are they leasing it? The most important, and dig and dig and dig, get all the information that you possibly can from the sellers or the owners of the solar, so that we can get clarification on what we need to do to move forward, and there's no surprises at the end. That's the goal, right? No surprises at the end. So anyhow, thank you so much, everybody, for joining. Really appreciate it, and then we'll send out the presentation to everybody. Thank you. Thank you for my guests. Thank you for the panel. Appreciate you, Greg and Naomi. Thank you.